Traders, Gary Wagner here, approximately 11 o'clock in Honolulu, 4 o'clock in New York, on Monday, the 24th day of February, 2014, and this is the daily report for gold and silver. We have nice upside moves in the precious metals pretty much across the board, except for palladium today. Gold trading about $10.90 higher. Current print is $1336.50. The high, according to Kitco, is 1340.10 and the low 1320.30. You can see the highs and the lows according to eSignal. One is based on spot, the other is based on a continuous contract of the COMEX futures contract at 1336.60, currently up $13 on the day. Silver also trading higher today, looking at the spot market, currently trading at $21.96, just below $22 per ounce with a low of $21.52, high of $22.29, puts it up roughly 14 cents on the day. Traders, we're going to start today's show by looking at a 240-minute chart. We have absolutely surpassed our first basic goal that we had, and that goal was roughly $13.29. You can see that right here on this 240. Interestingly enough, if we take a look at the recent activity, we had this tremendous spike hike in the price of gold. Of course, that's coming really off of this double bottom, this low sitting at around 1181 to 1186. Market comes up. We run into some real, call it resistance, roughly at the 1250 area. Comes up, makes another high, this time at around 1273. But then comes back down. Once it comes back down, though, we have this clear move up, and this move up does take us to our first target, which was 1329. It retraces pretty much precisely 23%. Our stops are currently sitting just below this point. 1307.50 is where our stops are below. And so we had a low, I believe, 1310 on one day late last week. And then, of course, we have this acceleration and move above this point today, currently trading at around 1336. Now, all I've really done, now when we move to our daily chart, it really becomes apparent. This, of course, is in a standard candlestick format. And when we look at this chart, what we see is that tremendous rise we just talked about. Of course, once we see that rise, this is the 1329 area. This is that top here. Market comes down. It tests 1307 right here. And you can see this tremendous candle that we've gotten today, this $10 move. And when we look at the types of moves that we have had in this marketplace, of course, over the last couple of weeks, it's really significant in terms of candle size. You can just go and pick out some very, very $10 plus days, some large moves in the market. And you can see that this market has really been characterized by these spikes up. We did get one shallow retracement right in here. That's the only two red candles that we get when we look at our period of time since the market really began to move. Was slow at first, consolidation here, nice spike up, a down day, then small bodied. And these are really points in which what I refer to as building a base, because what happens is the market will genuinely move up in stair steps, something like this, our 5 waves up according to our Elliott wave theory. But another way that we see this, or another characteristic or way that we see this market move up is move up in short spikes, but then kind of move sideways, build a base, consolidate, move up, build a base sideways. And so we're seeing a little bit of that right in the most recent activity. You have to really look at the intraday charts to get a better sense of it, but we are getting that type of characteristic in the market. And then, of course, when we compress this daily chart, we can very, very clearly see the couple of areas that I've highlighted as my belief in terms of where our next targets are. This is the 1360. You can easily see where that's based upon. That's this top. This is that other top that we spoke about. Here is the second of our double bottom. This is the double bottom here, bottom 1, bottom 2. We also talk about the fact these are pretty significant rallies. This rally here, not so much here, but it was a rally nonetheless. These were really the two last rallies that we saw in 2013, really being characterized by a loss of about 28 to 30% in the price of gold. But we're starting to gain some of that back as we move back into higher territory and move to this range here, which is, as I said, 1335. So the different targets that we're going to have right now is, now that we're trading close to 1340, my question is, are we going to have enough energy to maintain this move up to get to 1360? In terms of stop placement itself, though, we're going to have to keep it right where it is, because that's really the only logical place. I don't have anywhere else that I'm showing any kind of real active resistance in the market. So for the time being, we're going to leave our stops just below 1307.50. This is another daily chart that we have been using, of course. This has got not only our Fibonacci retracement areas, but it also has a substantial intermediate count, wave 3, 4, 5, our correction A, B, C, our impulse phase that fails here. We go into our bear count, 1, 2, our long 3, our 4, I believe we've completed our 5th, and we're currently in our A wave. So what am I looking for in terms of future perspective? Well, the first thing that we can say with absolute certainty, and I'm glad to be able to say it finally, is we have definitely broken above this long-standing resistance. And that long-standing resistance is a resistance that's really been the characteristic of 2013, a part of 2012, if we take a look at it. It took us till the first part of 2014 really to break out of it. Now, what do we think is going to happen? Well, in a classic scenario, what we might see is something like an A take us up to about 1360, because that appears to be where we're looking to go. A B, will that take us back to about 1302? I'm not really sure. We haven't calculated that yet. And then lastly, a C, and that C should probably take us to about 1435, because that's this former top. Those are the basic targets that I have. So that's what I would be looking for. However, we have a basic belief right now in what's been moving this market as well as the equities, and I think that that needs to be thoroughly examined and explored. And we talked about this on one of our chart this sequences, as well as many times here on the show, and that is, it's very rare to see the equities markets and the gold or the precious metals markets moving in tandem. When we do see that, one possible explanation is the belief that tapering will either be sustained, will be elongated, will not be as short as previously believed. In other words, that tapering's not going to end as quickly as we thought. And that kind of belief of a cheap monetary policy by the Fed itself will fuel the equities markets, and it will fuel the precious metals markets. And so therefore, that's something we definitely need to take a look at. And traders, I have put up our weekly chart. Weekly chart has one fib retracement and a horizontal line. Horizontal line here was simply my target. It is not bound by fib retracement so much as there's areas close to it. And you can easily see that we've exceeded my first particular goal. Now, in terms of our fib retracements, 1373, that is our 76% retracement. Realize this retracement is just looking at this last sell-off here, and that would be the last line there. After that, we're going to have to do our fib retracements from some different points, but this is the 1435 down to the 1181, and these are the different various areas that we're going to be looking at. We are now at 1336. And that is our 61% retracement. So if the market is going to stall in this area, we need to see how it reacts coming to the 61% retracement. If it breaches through that, our next point's got to be, as I said, 65 to 73. Now, no doubt, silver has just been an animal in terms of the way that this market's gone up. This is a 60-minute chart. You can see, as we take a look at this market, we were in that heavy congestion area for the longest time right in here, but when we broke hard, we broke solid, and we have not seen any kind of congestion up until last week. And now you can see that we had this basic band, but if we take a look at the tops that we're looking at today, they're absolutely exceeding those prior tops in silver. And for those that are really looking to add silver to their long gold, they can begin to do it, but do it very, very lightly. We could, in fact, be at the top. I myself would just stick with our gold trade, and we will look to collectively add to those positions at very, very strategic points. But silver has absolutely broken above this resistance right here, and that resistance was at around 2180. And we're now headed, it appears, to 22 as we've had highs at 22 today. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.